Strategy is everything. That's what Gary Wagner says. He'll be telling us all about it on Chart This. So brand new episode of For Chart This. As always, Gary Wagner joins me from beautiful Hawaii. Gary, thanks so much for being with me.
You're very, very welcome.
Every week, Gary, you walk us through new trading techniques investors can apply. Today, your lesson is on strategy is everything. Obviously, 3 words we've heard used before. What's your interpretation of it?
Well, what we're going to talk about is Japanese candlesticks. It's one of my favorite topics to discuss. There are significant patterns that were revealed, and this is back in the 1600s, that mathematically quantify market sentiment. It's a fancy way of saying they put how people feel into numbers, and that's a mouthful. And strategy is everything simply implies to the fact that we have very, very complex markets right now. There are so many variables and parameters that are involved in why a market does what it does. And without a really, really comprehensive strategy, I truly believe that you have the potential to hurt yourself rather than help yourself.
So before we get started, Gary, as always, you know I like recapping the week with you. And earlier in the week, we saw gold push through that 1601 barrier. What did you think of that move?
Yeah, I'll tell you. Last week we talked about the fact that 1635, it's a critical area for it to break out of that compression triangle. But here's what I'm finding interesting. We saw the market under pressure beginning of the week, went to 1588 intraday low, popped right back to 1600. But what is fascinating to me is the triad is buying. And who's the triad? You've got Paulson, you've got Soros, and you've got Gartman. You've got the 3 of them had news articles coming out that really said they were really increasing their holdings in gold.
So Gary, the Paulson Soros news is something I reported on often this week. We didn't really see it impact the markets, but is the message behind that stronger? That if these guys are confident in the gold market, it's sending a strong message?
Yeah, but you have to take this with a real big grain of salt. And you're absolutely correct. The underlying message is these big boys are buying, and typically when they buy, and I remember back to February of 2010, gold sitting at $1,200, it's announced that Soros is buying. Within 4 months, it goes to $1,600. Now, granted, 3 months after that, it went back to $1,300, but it seems as though when especially Soros, when he's buying, he's got not inside knowledge, but he is so acutely aware of what goes on in the market. I think he's one of the more prominent traders in the world today, that he's typically right. He's right more than he's wrong. So Soros is saying something. But here's the one thing you have to be guarded about. The information that we got that he increased his holdings is talking about what he did from the last quarter of it's a quarter behind. So it's the first quarter of this year is what he's talking about in the second quarter, as he actually has to, reveal it. So it's already happened, and that's why I don't think it moved the market so much, because the news was he had already positioned himself in.
On a final note, Gary, we saw the platinum and palladium market move quite a bit today. Was that due to the violence we saw in South Africa?
It could be. It could be. What I think we've been watching in silver and platinum and palladium, and silver was making a play for the last couple of weeks, is the fact that you've got the stock markets, the equity markets rolling again. And one of the added values to silver, it's an industrial metal. So when you have the perception that the equities markets are going to start taking off, platinum, palladium, and silver are going to have some positive feedback from that.
All right, Gary, so let's jump into your next educational segment now, where you will be guiding us through Japanese candlesticks.
Hello, Kitco viewers. It's great to be back with you, and I'm really excited about our topic today. And our topic today is integrating Japanese candlesticks with your overall technical studies that you are currently using. In fact, I think it's so important that the entire overview of the technical approach that I have, which I call the technical triad, is composed of combining different types of indicators together to get a more comprehensive or complete picture of the market. As you can see, we're looking at a weekly chart, continuous contract of gold. It's still in Henkin format. We're going to change that as we talk about the candlesticks in a second. But just to kind of recap and go from last week, we talked about the fact that we're definitely in some sort of a pennant, a flag, a compression triangle is what I like to label it, because that's a label from R.N. Elliott. At the same time, we are getting closer to this apex, and typically, or as the theory goes, I should say, as the range narrows, there is a buildup of energy, and once it actually breaks above or below, once it breaks out, because on a triangle, it can break either way, but once it breaks, there's a release of energy, and that release of energy is what gives it such a huge kick as the market breaks either above or below, or gets to the apex, I should say. Now, we looked at the fact last week that the moving average convergence divergence was almost crossing. Well, hey, it's actually crossed at this point, as you can see. And the market's formed a really, really excellent base at 1600 and seems to be taking off from there. You can see that we've had a solid base, and the other thing that I'm noticing right now is that on a short-term basis, right in here, you are getting a series of higher lows. You're also getting a series of lower highs, and that to me is significant, and it's also very, very bullish. What the Japanese were able to do that's absolutely unique amongst technicians is to mathematically quantify market sentiment and scenarios within the market that are indicative of a market that is about to reverse, hitting a pivot point, as well as markets that are having trends that are in continuation patterns. They also have different patterns that will indicate when a market stalls or consolidates, so that as you become aware of the different patterns and begin to include them in your everyday analysis, the insight is absolutely incredible. Now, what we're going to do is, let me go ahead and pull up a weekly chart. This is in straight candlestick format, as you can see. And all I have really done is I have labeled a few patterns, a few of the patterns that I see very, very quickly. And they're significant patterns in that what we want to talk about today are simply reversal patterns. And they're, for the most part, going to be fairly simple patterns. Now, as you can see, this is from 2010 all the way to present. And when we look at this market, what you can see is from the top to the bottom, these different waves can be all identified incredibly by different candlestick patterns. So when you combine the Elliott wave count, the Fibonacci, the trend analysis, the moving average convergence divergence, and add this, you get a fairly comprehensive viewpoint of the market. That's why I say strategy is everything. You really need to have this kind of complexity if you're going to, in my opinion, get a handle on a very complex market. In the short time that we have left, I want to spend a few moments identifying some of these candlestick patterns. They're mostly simple patterns, 1, 2, and 3 day candlestick patterns, or 3 week in the case of a weekly chart, but they are very, very significant. And the first pattern I want to look at is simply called a shooting star. Now, a shooting star is part of a group of candles called the umbrella candles, and they include the hammer, the hangman, the shooting star, and inverted hammer. But here's the key. On a umbrella candle, the most significant thing, first off, is that it has a very, very small body size, and that the tail itself is at least 2 times the length of the body. Interestingly enough, on this type of candle, actually color is not important, whether it's green or red. What is significant more than anything else is the length of this body. You have a very, very small body size compared to the tail itself. And the way that one looks at this particular pattern when we think about it is, the market opens up here at the top of this red rectangle. and at some point it really makes a drastic high. But the buyers cannot hold on to that price point, and selling comes into the market, bringing it back down near the lows to the point where it almost opened. This is a shooting star right here. Now, a shooting star and all of these other patterns need to be taken with what is called confirmation. And a confirming candle is simply on the following day, or in this case, week. What you look for is that the next candle, meaning this one right here, has a lower low, a lower high, and is a red candle, meaning it closes below the opening. And so you do get the confirmation, and that's a very, very solid signal. As the market comes down, you can see at this pivot point or bottom of the market, you get a very, very small bodied candle. This is more doji-like, and then it's engulfed by the following week or candle, meaning it opens at or below the price and closes above where the rectangle or the price trading activity took place. So this is simply called, there's an engulfing bullish, and the reciprocal is an engulfing bearish. Obviously, we see the market really take off from this point, comes up and it makes a very interesting high. This is around 1200 to 1250, just below 1300. And the pattern that we recognize is simply called a three-river evening star. The way I like to look at it is, as a marketplace moves up, there's going to be that pivot point, and when it moves down, you're going to get what I typically call that V. And you'll get that also as the market comes down and then moves back up. You get this V. Now, one way to identify this type of reversal is by looking at this pattern group, because this pattern group is really the ultimate pivot point. As the market comes up, you get a higher close, you get a perfect doji right in the center. You see that where the open and close are almost identical. That is the consolidation, the turning point. Then you get the red candle. And that is a beautiful, beautiful pivot point in that way. Now, the market comes down, you get this engulfing bullish again. In other words, small-bodied candle, a larger-bodied up candle, and that's pretty significant. We'll go ahead and we'll move this down a little bit. You get a tremendous rally. And as we reach this triple top, we get a series of interesting signals, because you get two dark cloud covers right in here. The market kind of consolidates, and then finally you get this engulfing bearish, which is obviously the opposite of an engulfing bullish, and that really caps the top of the market. Interestingly enough, as the market comes down, once again, we get this three-river morning star. Market goes up, an engulfing bearish, an engulfing bullish, and so on. And so you can see that in each occasion where we reached a pivot point, there was a significant candlestick pattern that really highlighted, really pointed to the potential of the market, the fact that we might see it reverse. And now when we go ahead and take a look at this in a little bit more detail as we compress it, you can see that pretty much all the way up at these bottoms there were clearly identifiable patterns. At the tops there are identifiable patterns, and when you add them to the other indicators that we have been talking about, the information that you gain is unique, absolutely unique. Now, this was a cursory look at best. So what I am offering Kitco viewers is the opportunity to view, and there's absolutely no charge, but to view a much more detailed lesson. It's a seminar that I did a while back, but it covers a lot of these patterns, and most importantly, it covers this technique that I'm talking about in detail. Now, to view the video, simply go to our site. Here is the address. I've just put it up on the screen, thegoldforecast.com, and you can see the image that I'm just putting onto the screen, and it's an image of what the website looks like. If you take a look right here, you're going to see a small green box that's not labeled. Go ahead, click that green box, and it will take you to the video called Strategy is Everything. Candlestick charts.
Gary, as always, thank you so much. And we'll see you again next week, where we will have another lesson from Professor Gary Wagner. Thank you.
Absolutely. My pleasure. My pleasure.
Thanks for watching this edition of Chart This. You can email me your comments and suggestions at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.